Alrighty, Candle Range Theory Trader back with you with another video talking about a deep study of the weekly candle range theory. So let's not waste time and get right into it. Now, there's two approaches to trading the candle range theory on the weekly chart. You can stick to just trading the weekly chart and do the three candle range theory on the daily, and you're just looking for daily expansion candles in your direction of your bias, which I'll show you. Or you can use the prior week high low, those levels, to frame reversals. I'll show you this as well. So we're going to go through the first approach first. So on a weekly chart, this is what you'll see. You'll see week one, candle one, which creates the range. Week two should be some type of consolidation that pokes above the prior week high and then close back inside of it. And then this is our week right here, week three. So we would hope that the whole week expands in one's directions for the most part. And we're just looking for daily expansion candles to take to the downside. So you also have the option where you may have a 1 week that may be fairly small, and then you'll have a week that will sweep one side of it and close below it. And then we also have the option to, you're not trading this, you're going to trade what I call candle four, where candles 2 and 3 are in one candle. And I'll show you an example of this that's not pictured, but you're just going to take a continuation out down to the downside. It's basically a breakout of the candle range. So this is less common, but I'll show you this. So because this is the weekly chart, you're only going to get one setup per month per pair. Okay, because it takes 2 to 3 weeks to set up. So there's only 4 weeks in a month. So you're not going to get a ton of these, but just one. And if you take two, I'd say two. If you out of the 5 trading days in the week, if you can get 2 trading days, that's good. You can do decently trading this method. So helpful indicators you can use are the Mark Levels indicator by Mark Tools and a fair value gap indicator by Nephew Sam for entries. I have other videos on that. You can check the links in the description. I'll include all of those. So for best entries, you want to get in around the open price of the day or around the open price of the candle if you miss the high or low of the day. And you can also use fair value gaps or inverse fair value gaps in line with your bias. Again, some videos describing that will be in the description. Now, there's also something that I like to call the start and stay rule. I made this up, but it's just something that I found to be true. If you expect the price to be long, once your candle starts to turn green, if the daily candle starts to turn green, we expect it to stay green, right? Because we're long. If you're short, when the candle starts to turn red, it needs to stay red. It should not be flipping back and forth, red, green, red, green, red, green. That's like doji behavior. That's consolidation behavior. No, we don't want to see strong momentum where if price turns red, if it turns negative and we're short, we want it to stay that way. It should not be reversing, right? So it can stop you from taking larger than unnecessary losses. Okay, so use the open price of the daily candle as a guide for that. Okay, and that'll help you stay on the bright side of the trend for the day. So here's the weekly CRT. Let's look at some examples here. So this is on the pound dollar. So we have week one to the far left here, this doji candle, that's the range. Week two gives us the poke below the prior week low, closes inside. And then week three gives the expansion. So this is 5 days worth of price action right here, or for the week of November 24th, 2025. This is our focus right here. So we can start the week with a bullish bias, and we expect to see price expanding to the upside. So now let's see what the daily chart looks like for this one candle here. Okay, this is the candle that I'm going to show you the daily chart of. So we drop down to the daily. And like I said, about 2 days worth of price action here. Monday, you could have got a little bit, but it wasn't much. The main trading days were going to be Tuesday and Wednesday opened. It, went down a little bit, did retrace, but then it did close green. And then Thursday, Friday just gave some retrace and consolidation for the most part. Friday is not the ideal type of day to take a candle 3 trade. It's really, Tuesday, Wednesday typically are going to be your best days. Okay. So yeah, that's how it goes. And then I wanted to show you the 8-hour chart as well, because I trade predominantly the 8-hour chart. So the best trading time frames for the 8-hour chart, because you get 3 candles. So that's why, it's like 3 chances to get a good move. One at 5 p.m., one at 1 a.m., and one at 9 a.m. Those are the 8-hour candle intervals. Okay, so it's just 2 4-hour candles stacked on top of each other. That's all. So the best entries here for the 8-hour chart would have been at 1 a.m. on Tuesday. That gave 54 pips. Or if you could have got the low of this candle here and maybe caught the chain of state of delivery, or maybe a fair value gap somewhere in here, you could have got 110 pips on Wednesday between this candle and this candle, right? And then, like I said, that consolidation and retracing from Thursday through Friday is what this is right here. Okay, so, but again, our bias, I'm not a counter trend trader when it comes to trading candle range theory. If I'm long for the week, I stay long. So that's how that will work. All right, here's a short example now. So we have the range candle for the week of March 31st. Candle 2, which is consolidation, the week of April 7th, and then candle 3, which is our trading time frame, April 14th. So let's take a look at the daily chart for this one red candle right here. Okay, so let's take a look at that. So this was the daily chart. So Monday could have been a good trading day. Tuesday would have been a good trading day, because sometimes Monday will give it to you as well. But typically Friday is really not the best day, because you see how this wick, the price ends on a wick. See, this was Friday where price retraced, right? So typically you will, like, remember the start stay rule. If you're red for the week, we expect that once the weekly candle turns red, we need it to stay red. So we're looking for these red days. Once it flips red, stays red, flips red, stays red, flips red, stays red. Okay. So you got 2 to 3 opportunities here that you could have taken advantage of. These would have been non-trading days, Wednesday and Friday. So as far as the 8-hour chart goes, you had a few. You could have got in right when the week opened if you would have caught the high of the day in the 1700 candle. Also the 9 a.m. candle, that was a 189 pip drop. You also had Monday's 1700 candle, that was right here at 5 p.m. That gave a good drop for 138 pips. And then Thursday's candle here at 1 a.m. gave 176 pip drop. So plenty of good trading opportunities for that pair right there. Okay, so next up, the less common, I'm not going to spend a lot of time on this, the 2 candle range theory. So you have candle 1 and then candles 2 and 3 right here for this week, September 4th, where it sweeps one side and then closes below it. So this is a breakout of the range. So we look for continuation the next 5 days is all. So let's look at this chart right here, the week of September 9th, and see how the daily chart broke down for this last red candle right here. So Monday would not have been a trading day. Tuesday would have been a better day right here, where if you could have got the high of the day or around the daily open. This was the open price that closed down here. And then Friday as well did give a drop for about 144 pips. Wednesday you could have got some too, but the price just came back, and I don't like that. But I mean, if you were smart enough to get out at the low, you probably could have got some of this price action. But I like to see just solid red instead of dojis. So, but you had a few opportunities this week to catch the continuation down. Now, for the weekly range and using the smaller time frame trades, these are like trading false breakouts. So what I mean, this is best observed on the daily chart, but you can use the 8-hour or 4-hour. And all you're looking for is a candle 2 that's a false breakout above the prior week high or prior week low. Okay, and then you take the reversal off of that. So this is better seen than explained. So using our market levels indicator, we see here the prior week high right here. Price wicked it twice, which sometimes you will have. Excuse me. Pardon me. Sorry about that. So Tuesday pinned the prior week high. Wednesday, which is our candle 3, pinned it again, but then it dropped the rest of the week at Wednesday and Thursday. So all you're looking for is just pins to the high prior week high and low. But look, there aren't any guarantees. Sometimes price will break out of this range, even if it pins it. So you need to always use a stop loss. And remember the start and stay rule. Okay, I'm going to show you an example of this in a little bit. As well, just because you get a pin to the prior week low doesn't mean you're going to get a big fat candle in your favor. Okay, this was a doji. You still could have caught the low of this candle. And I think this candle went for like 100 pips or so from the low up to where it closed. But as you can see here, it didn't. It just mainly was a consolidation day. So you want to try to be in if you can catch the low, but don't expect like this fat crank. Can't just every time a prior week gets pinned, just trade what's happening, not what you want to happen. Trade what you actually see. Okay, here's a loser, or not the next one. Next one will be a loser. But here's another example here where price pinned the prior week low, closed above it. And then candle 3, this was our trading candle right here. This would have been our optimum trading time frame. This is a daily chart. So remember that you're just framing reversals off prior week high and low. Okay, so when you see price pin it and then close inside, you just look for that continuation up, and that's it for the next day. All right, now this is the loser. So this right here, pinned the prior week low, closed here, but then look at the very next candle. Everybody who went long here, price opened, it went up, and then dropped like a rock. Okay, so there will be losers. This is what I'm talking about when price may break out of the prior week high or low. This is a case of that. Okay, so you need to control risk. Remember the start and stay rule. This candle opened, it started green, but it didn't stay that way. Once it turned red and started coming back, that was your sign that, hey, look, not going to be a green day. Okay, take what you can get or get out while you can. All right. Now, if you can use the weekly chart to form your bias for the week, then you can definitely avoid losses or counter trend trading. For example, this is from the week that's actually going on right now on GJ. We have the range candle right here, candle 2 right here. So for this week, the bias would have been long. So you would have had no business going short any of these days because the likelihood of price continuing long was great. This could be a candle 3 week. So if you're trading a candle 3 week long, then you avoid going short when you see these prior 2 candles. I hope that makes sense to you. Okay, we're not trying to counter trend. Even if it works out, I don't care. The bias, I'll only trade in line with my bias. Okay. So this right here will save you a lot of heartache. Let's look at the daily chart for GJ. Okay, anybody who tried to go short this week got destroyed. No matter what they saw in the lower time frame, higher time frame is typically always going to win. Okay, anybody who went short at this high day got destroyed. And anybody who tried to go short here on this day got destroyed. Okay, Monday was a consolidation day, but Tuesday and Wednesday were both strong moves to the upside. Because remember, Monday, Tuesday, Wednesday typically are going to be your best days for trading the weekly range. Okay, and then Thursday, Friday, sometimes you'll get consolidation or retrace. So, in conclusion, you can do a top-down analysis and start on the weekly chart to make sure you're not trading against a possible candle 3 like I just showed you. Okay, if there's no clear candle range theory on the weekly chart, then you could drop down to a daily and just trade daily levels. That's fine too. Okay, because you won't see it every single week. Every single week is not going to give you something that looks like this. That's just not going to happen. Okay, but dailies you'll see it more often. And then if you don't see it on the daily, then go to the 8 hour. Okay, but either way. Now, the open price of the day or open price of the candle is where you're going to be golden. Remember the start and stay rule. If price doesn't behave, just cut it off. Okay, don't force anything. And remember that the market doesn't exist to give you money. It's trying to take it from you. Don't let it. Price will break out of the prior week high, prior week low. I showed you an example of that, so you need to be ready for that and just find another pair when it does do that because it is going to go against you from time to time. So you want to be sure to control risk. So let's see. You want to be sure to manage risk or just stay a poor trader, period. Okay, it's going to be the best risk managers that make money trading, not the best traders. Okay, traders are a dime a dozen. But would you believe it that if you know how to manage risk, people will pay you. They will pay you to manage their money if you know how to manage risk. Anybody can trade, but not everybody can manage risk. So that's the name of the game. Okay, so I appreciate you watching. That is the deep study on how to trade the weekly range. It's very simple. It's just the same thing over and over on a different time frame, but they can be rare. So again, if you don't see anything on the weekly, just drop down to the daily. If the daily doesn't show you anything, drop down to the 8 hour. I don't go below 8 hour, but that's just me. But appreciate your time and attention. Thanks for watching and have a great rest of your day. Take care.